Hello, everyone that's filtering into the Zoom room as we customarily do during these SkyBridge Bitcoin review webinars. Just going to allow 30 seconds to a minute to allow everybody to get into the Zoom room before we get started, but excited to resume our SkyBridge Bitcoin review during what has been a very quiet period in crypto markets and financial markets in general, but excited to talk through some of what's been going on over the last few weeks and a lot to talk about even today, things going on in broader financial markets and crypto markets as well. But again, just going to take another 30 seconds before we get going here.
What did you mean by that though, John? Like what's going on today? Something's going on today?
Oh, nothing specific per se, but just more volatility in markets that's born out of some of the events of the last week or so. But we'll have plenty of time to get into that. It looks like we're starting to level off in terms of the number of live participants on today's SkyBridge Bitcoin review. So we'll go ahead and get started. But just a reminder, anybody who doesn't know me, my name is John Darcy. I'm a partner at SkyBridge Capital on the business development side, also the managing director of SALT, which is our global thought leadership business conference in the Bahamas, Crypto Bahamas, in partnership with FTX. If you were there, thanks for coming. Thanks for being part of the event. I've gotten great feedback externally about that event. Look out for an announcement in the next week or two regarding dates for 2023, which I am obviously biased, but I think it's a must attend event. Our next flagship event will be in New York, SALT, New York, September 12th to the 14th. We'll also have a very heavy element of crypto in it, including partnership with FTX on that as well. So both of those events, I think, worth your time and attention, and we'll have more information on that. But that's enough about me. Welcome back to the SkyBridge Bitcoin review. It's been a little while since we did one of these, so we wanted to get one organized during this volatile period in crypto markets and financial markets in general. And we wanted to do it with the original cast of characters, which is just our two SkyBridge partners, our managing partner, Anthony Scaramucci, as well as our president, COO, and co-CIO, Brett Messing, to talk through some of the big stories that have unfolded in crypto over the past few weeks that have obviously driven a lot of volatility. But as we will probably talk about, it has had a cleansing effect on crypto in general. And now we're focused on what does it mean for the long-term future. Brett and Anthony, thanks again for joining us on the SkyBridge Bitcoin review. I think we'll start obviously with Terra. So a lot of, and I'll leave the editorialization to you guys, but I think a lot of the weakness in crypto markets and financial markets in general has been driven by macro factors. Obviously we have the Fed tightening after a period of severe monetary easing in the wake of the global financial crisis, and then the pandemic-driven crisis. So that's been part of it. But then the demise of Terra and Luna has driven a lot of the downward price action in crypto markets. I want to start with you, Brett. Let's focus specifically on Terra. How long have you been paying close attention to Terra? How long have we been paying close attention as a firm to Terra, Luna, and that trade? And what has been SkyBridge's sort of house view on that asset leading into what happened a couple of weeks ago?
John, before I answer that, I just want to give a mood meter as a Bitcoiner, which is I actually was more sort of bummed out last summer when, Bitcoin took a hit. We got to 64,000, and then, Elon sort of, got the ESG issue moving, and then the China ban, and it traded down to 29,000. Because at that point in time, the markets were fine. Everything else was good, and it was a very Bitcoin specific thing. Whereas, I'm not going to go through the litany of stuff going on in the world, including, right, the failure of the largest crypto project, right, $50 to $60 billion of value just evaporating, in a matter of weeks. And Bitcoin is outperforming Amazon.com stock today, right? Everyone is losing money in whatever asset class. So I am considerably poorer than I was on January 1st, but I feel better about Bitcoin, less worried, sort of despite the pullback. And I actually think it's actually performed quite well, given everything that's been thrown at that. Look, Luna showed up in the fall. It was hard to not to show up on a sort of a radar screen. And then we started seeing, UST Terra, which is a stable coin, accumulate a lot of assets. We really didn't focus on it in a very meaningful way until, and I don't know how much of the story is known by our viewers, but This was a stable coin that basically doesn't have anything collateralizing it. There's sort of a mechanism, sort of a game theory. It's tied to another asset. And they very smartly, from a marketing standpoint, bought a bunch of Bitcoin to back this stable coin. And, we Bitcoiners are very welcoming. So if you buy Bitcoin, we love you, like regardless of, who you are, what you're doing. But it did lead us to look a lot harder at Luna. And what it seemed to be, was an unstable system. And we became concerned that, it could unravel. And more specifically, we were concerned that the Bitcoin that was bought, and it was about 80,000 Bitcoin, would be sold on the marketplace, and could the market absorb that? And that's exactly what happened. And so I guess the good news is that the market did absorb it. And as I said, we sit here today in this terrible, terrible tape, with Bitcoin, down from 45,000 at the beginning of the year, but outperforming Amazon and Facebook and Netflix and Uber. It's a risk asset. Anthony and I were just talking about, like, the markets are going to be tough for a bit. But on a Bitcoin specific level, I'm actually feeling a lot better than I did last summer. I don't know. Anthony, you have any views on that?
Well, there's a lot going on. So let's talk. Let's take it from the top. Congratulations to John Darcy and his team for Crypto Bahamas. We had 2,100 people there. It was a resounding success. Some of the smartest people in the world there. I think Brett and I came out of that thinking, okay, there's some of the smartest people in the world. So we have A+ intellectual capital, and we have capital going into this thing. If you think of Katie Hahn's business, other businesses, Amy Wu's business at FTX, there's billions of dollars of capital going alongside of A+ people into a space that we think is going to transform the global economy. So this is the biggest idea that we've seen since Web 1. I think that's number one. Number two, on Terra Luna, the whole situation, I want to applaud John Sfoulos, the head of cryptocurrency at SkyBridge, the head of cryptocurrency research, a 35-year friend that cautioned us. And as a result of his research, we all decided to avoid it from a portfolio exposure. And so when you think about it, people say, well, let's index crypto. Luna, correct me if I'm wrong, but it was in the top 10, right? I think it got to 7.
Got as high as 7. It was
so it got as high as 7. So if you were just blindly indexing, you picked something that was the 7th largest cryptocurrency that traded to 0. So then you should be saying to yourself, okay, well, why the hell am I in crypto? Things can go to 0. The market has corrected. The NASDAQ's down 30 from its high. So that's pain there, but crypto's down 50 plus from its high. Why would I even be bothering? And so the short answer to that is you'd be bothering because there's seismic change happening and a seismic opportunity of great economic innovation and economic efficiencies that are coming. And a result of which, when you get change like that, it always comes with oscillating volatility and uncertainty because it's taking out the old guard. The horse and the carriage, they didn't like the horseless carriage. There are people looking up in the sky and saw a plane and said, there'll never be a commercial applicability for a plane, and I can go on and on. See, John's laughing right now, and it's a good thing he's home and not next to me because I'd strangle him. John's laughing because I'm showing a sign of my age by mentioning the horseless carriage. So why don't you go, yourself, John, okay? But the point that I'm making to people is that these are big changes. So the best example I can give in my lifetime is March of 2000. Web 1 was super exciting. In 1999, we were measuring eyeballs, which was ridiculous. 1999, everything had a .com next to it. Money was getting thrown into the space. Valuations were tippy top. And then the NASDAQ cracked. It went from like 5,000 to 2,300, down 55 or 60%. And there was a group of people, young and old, that said, it's over. I'm walking away from this. I'll never own a NASDAQ stock. I'll never own technology. Warren Buffett was right. Let me get out of this thing. And yet over the ensuing 20 years, it was the mega trend. It was the investment of the generation to be in that stuff. And I think that's where we are right now. So I don't have a strong opinion about which specific layer ones. I know that there's a group of layer ones that are going to lead the world. I do have a strong opinion about Bitcoin. I know that Bitcoin is going to be with us, and I'm fairly certain, if not this year, shortly thereafter, there will be a Bitcoin Cash ETF. And I surmise, and I'm going to say this rhetorically, then flip it back to John and Brett, but I would love to hear the conversations that the Grayscale guys are having with the SEC. So, Mr. SEC, we have an asset that there's $8 billion of value trapped in it because it's trading at a 30% discount due to our trust structure. We're charging 2%, but we can go down to a market price of 70 or 80 basis points on the ETF. So we have an opportunity to save our clients 60% on fees, and we have an opportunity for them to realize a 30% gain just from this thing trading back to par. And we would like your permission to turn this into a cash Bitcoin ETF. There are cash ETFs trading successfully in a bear market in Canada, and there are ETPs trading in Europe. And you're supposedly for the investor and for the shareholder. And these are two amazingly shareholder friendly things. What say you, SEC? I find it hard to believe that these guys aren't going to break through. I'll flip it back to John. And John,
Yeah.
I am old enough to remember the horseless carriage and the carriage. Okay.
Well, it's great to have someone of your seniority to provide us context like that.
Fixing my nose here, some makeup that I need to dial up off my nose.
Well, Brett sort of alluded to it earlier as it relates, and you alluded to it too, Anthony, about, in terms of how we evaluate assets that go into our flagship portfolios and the portfolios of our crypto specific funds. And I was asked this question by TechCrunch recently and provided my perspective. But Brett, let's start with you. In terms of what the fallout from this is going to be in terms of how people deploy capital into crypto, Galaxy came out with a note today, Mike Novogratz, talking about how, obviously he's devastated by smaller investors that have lost money as a result of the Terra Luna situation. But that crypto in general, part of a core principle of crypto is it's caveat emptor, buyer beware. You're sort of responsible for your own research and risk management and things like that. But, we at SkyBridge like to think of ourselves as institutionalists that are bridging the gap for investors that might not have previously wanted to invest in crypto, but introducing them to the space. And there might be some of you on this call that are in that boat. What do you think the fallout from the Terra Luna situation is as it relates to asset allocation within that crypto pie? Do you think you're going to see a period of greater outperformance by Bitcoin and Ethereum, for example, and you're going to see DeFi products and more nascent coins struggle to get off the ground as people shy away from risk a little bit? Or do you think people have short memories and will quickly see altcoins rebound?
No, I think that's exactly right. I think, look, whenever a market gets crushed like this one has, when it bounces, it's the highest quality stuff. We saw that after 2020 in the credit market. It was, the triple Bs that came and then took a while before you got to the really junky credits. And I think it's going to be similar. And I think it's going to be even greater here. I actually had breakfast with Ross Stevens of NYDIG last year. This is pre-Luna. We were speaking about last year. And I said, what surprised you? And he said he was surprised at how capital sort of spread across the ecosystem, that Bitcoin was getting, sort of a smaller percentage of wallet share, that investors were coming into Bitcoin, but much more quickly moving out the risk curve than he had seen in previous cycles. I think that's going to stop for two reasons. One is this Luna blow up. And the second is like the big pools of capital that come in, we always have to remember that it's still the old guys like Anthony and me. And I'll let people know, Anthony's playing hurt today. He has COVID. So if he's a little bit not at full energy, that's why. But
one of you's calling me old. The other one's telling everybody that I'm an invalid sick with COVID. Someone don't take the bear market out on me, fellas. Okay, go ahead, keep going.
The HIPAA violation.
Yeah.
Anyway, when you think about people 50 to 75 who are the people that have the wealth in the United States, they're also the people that control the big pools of capital. They know Bitcoin. They all know Bitcoin. most of them have heard of Ethereum. They've not heard of anything else. They don't know Cardano. They don't know Solana. So they were always headed for Bitcoin. And I think that to the extent that they're going to be diversifying into other coins, it's going to take longer now because, as Anthony pointed out, number 7 went to 0 fast. And, I just think that's going to create a bit of risk aversion that's really going to help Bitcoin and Ethereum.
Anthony, do you agree with that sentiment?
I agree with the sentiment, but I want you guys to think about how early we are. Think about the Luna Terra project and its evolution and how it got to number 7. Okay, so there are things on CoinGecko right now, some of which have great technical properties that may end up in the top 5 before we know it. We just don't know. So just to repeat myself, it just augurs for not being an indexer. It augurs for doing some fundamental research and staying the course. Last point I want to make, I sort of made this at 4:00 on CNBC Friday afternoon, that Bitcoin and the decentralized movement known as DeFi is incredibly anti-fragile. This is the great irony because the old timers don't like it, but they like centralized things. Imagine $700 billion or $1 trillion taken out of the central banking oligopoly, what the Federal Reserve would have had to do to prevent a systemic banking crisis. And yet, last year at this time, we lost $500 billion. This year at this time, we've lost $700 billion. And because it's so decentralized and it's so stovetopped and siloed that you're not having this tsunami / domino effect. So it just speaks to how powerful this can be once it really gets going. I want to address James Little's questions real quickly. What's the makeup of our crypto investors? Yes, we have individuals, RIAs, and investment advisors. We also have institutions. We have a mandate about to come in from a sovereign wealth fund, but we have a collection of different people. We have some of the smartest and brightest investors in the world, including guys like Sam Bankman-Fried that are clients of ours, as well as the guys from Core Scientific, the largest publicly traded Bitcoin miner in the world. And then secondly, the overall market is trading exceptionally well, given the Terra Luna news. Will the Ethereum, I guess the merger, lead to the next leg up? Why don't you address those two things? Do you like the way the market is trading here, Brett? Let me, before you answer though, let me just point this out. And I pointed this out to you yesterday. I'd like to get your reaction and public remarks on it. Terra Luna, they had 80,000 Bitcoins. They sold those over a period of 12 trading days. That's a 0.25% of the overall market of Bitcoin. And yet that selling caused a domino effect or a cascade where Bitcoin lost 25% of its value. So some people like where Bitcoin is, the fact that it didn't really dip below 30,000. But, Bitcoin did move down on that move. A 0.25% Bitcoin supply sold into the market, knocked the price by 25%. What say you about that?
I don't think it's that relevant. I think people were front running that. People saw Terra Luna getting, wobbly, and they figured there'd be 80,000 Bitcoin coming to market. So sell. Plus, in that kind of situation, you get a buyer's strike. I think when we get these markets falling, everyone's focusing on the selling. I think, and I've seen this in other markets, commodities markets, credit markets, the gap downs come from the fact that the buyers walk away. And you and I were sitting here before we launched being somewhat bearish. And I think the reason why we're bearish short term, in terms of just the general macro outlook, is, right, where's the risk buyer in any asset class, right? So who's stepping in to buy, Kathy Wood stock right now after Jerome Powell's speech yesterday, after what's going on in Ukraine? And you don't see that. And so without buyers, it just doesn't take that much. But that would be, again, I think it was front running and a buyer's strike.
But let me ask a different question, though. Do you think these markets are very, very liquid, or do you think these are thinly traded markets?
I think they're both, right? You know what I mean? I think all markets, again, I'll use the debt markets as an example. The credit markets, the high yield market, is generally very liquid, but during there are points in time where it will seize up, right? Like in March of 2020, it seized up. We have seen people buy size in Bitcoin, like Michael Saylor, Elon Musk, without moving it. If you remember, Elon Musk, said he sold some of his Bitcoin just to test the market, to show that he could sell it without moving the market. So I do think it's liquid. But again, you have 1,200 point down days, no buyers, every asset gets illiquid.
Okay.
There was another big piece of news that rattled markets, I think, in the midst of the Terra collapse, and it was relating to Coinbase. Transparently, we use Coinbase for some services, but as part of their earnings report, they came out with a disclosure that basically insinuated that in the event of a full market meltdown and a bankruptcy for Coinbase, which is obviously very far-fetched that would ever happen, but that client assets would potentially be in jeopardy in that scenario. And that led to a continuation of the lack of trust and confidence in crypto markets during that period. Brett, maybe I'll have you start on that one as well. The Biden administration has come out today, actually, and we think it's very constructive that they did so, talking about how they want crypto exchanges to separate customer and corporate funds in the event of what Coinbase described, an unlikely scenario, but one they have to plan for regardless. But Brett, what do you make of that announcement? First of all, was it just bad PR, bad communication? Are client assets actually in danger? And then what do you make of the Biden administration's comments on creating constructive regulation to avoid this type of misunderstanding?
Well, let's just go back in time and talk about how this happened.
Yeah.
So there are a couple lessons here. Lesson one is don't publicly go to war with your regulator. So Brian Armstrong, in a tweet storm this winter, went after the SEC. Okay. In March of this year, the SEC issued a tax ruling guideline that said if you're a crypto exchange, you have to account for client assets as a liability on your balance sheet. Okay. That rule, guess how many companies that rule applies to? That rule applies to one company. There is only one publicly traded company for which that rule applies. So they created the Coinbase rule, right, where Coinbase's client assets, right, would have to be treated as a liability. That SEC ruling resulted in the disclosure that Coinbase made, right, which got people concerned. Coinbase is undertaking efforts to do whatever they need to do with user agreements, and so that there's sufficient segregation so that they don't need to make this disclosure prospectively. So I think Coinbase can fix the problem itself. I think Coinbase gets a D for how they handle this in terms of communication, dealing with the market. They've said they're going to fix it. They haven't given a specific date by which it will be fixed by. And I think there are people, the whole Biden administration has gotten much more crypto friendly. And, I think that the sort of news today, which is sort of investor protection, will be helpful because we want constructive and helpful regulation. But I don't think it's necessary to solve Coinbase's problem. I think Coinbase can solve Coinbase's problem. So it's good for the ecosystem. I think the Coinbase thing will take care of itself because Coinbase has a business interest, right? People are going to move their assets elsewhere. But let me make a point, and this is the problem of being public. If Kraken was public, they'd have to make the same disclosure. If the FTX was public, they would make the same disclosure Coinbase just made. So while people might be moving assets from Coinbase to other exchanges, they are actually no safer elsewhere. This was just... it was sort of a comedy of errors. But you're right. To your point, John, the timing was terrible, right?
So should people keep their coins on exchanges, or should they take them off? The whole cliche of the not my keys, not my Bitcoin.
Look, if you have sufficient amount of crypto exposure to have an institutional relationship where you can be in cold storage, I think you should do that. If you're comfortable with the technology, I am not. I'm afraid that I put it on a Ledger wallet and misplace it or somehow screw it up. If you're comfortable with it, you should do it. If you're not, I think you are. Coinbase is incredibly well capitalized. Again, I think they'll fix this problem. I actually think there's much more danger through people's phones, that they don't have an authenticator app or a physical security key, and that someone, gets control of their phone, and that's how they get to their Bitcoin. So, it's a more challenging asset. There's no question about it, but I do not think you should be worried if you're keeping your assets at Coinbase. I mean, John, you're knowledgeable about this stuff. What are your thoughts on this issue?
Yeah, I would echo a lot of what you said, Brett. I think that it was just poorly communicated. I think the fact that the Biden administration has been so proactive coming out and identifying this issue and wanting to constructively regulate crypto, I think it represents a sea change in how the administration is tackling digital assets. And we obviously are very ingrained in this industry, have a lot of friends who are actively educating lawmakers in Washington around digital assets so that there's not such a adverse reactionary response anytime anything happens. It's not, we're going to regulate digital assets away. It's how do we make sure that we provide investor protections so that digital assets can flourish in a responsible way. And that's music to our ears in terms of how we go through investment decisions. We did not invest in Luna. We did not invest in the Terra ecosystem. Anthony gave John Svolos, our director of cryptocurrency research, a lot of credit for that. I think it was a consensus decision among our investment personnel that we wanted to avoid inherently unstable assets like that. And I think it's one of the things that differentiates us as a firm in terms of the lens that we look at crypto is we want to maintain that institutional risk-averse mindset while also exposing clients to what we think is a paradigm shift in financial infrastructure and money generally. But just switching gears a little bit, this is called the SkyBridge Bitcoin Review. It's not the SkyBridge Crypto Review, although we are bullish generally on the sector. We came to the sector with a mindset that Bitcoin is the premier asset. And Fidelity is an early institution that shared that mindset. And there was a piece of news that came out regarding Fidelity and 401ks that we think amidst all the turmoil around Terra and Luna and Coinbase and general market volatility, flew a little bit under the radar, but we think represents a sea change. Brett, why don't you dig into that and what you think the implications of it are for the crypto industry?
No, it's awesome. It's incredible. So Coinbase actually, and I wasn't aware that their business is this big, but they service over a third of all retirement assets. So, a third of the 401k assets in the United States sit at Coinbase, at Fidelity. And Fidelity is going to be offering Bitcoin as a choice for people in their 401k plans. So, you're picking, I want this much in the S&P, I want this much in the high yield bonds, up to 20%. Each employer will decide what the limit is. So an employer of a plan, you're Disney, you might say, well, we only want people to go up to 10%, right? So it'll be employer by employer. But it does a couple things. One is it makes it easy and incredibly safe for a vast number of people, large pool of capital to access Bitcoin. The second thing is, it's just the further mainstreaming of Bitcoin. And the way I describe it to people is when we started investing from our flagship fund in Bitcoin, people were like, are you guys nuts? Like, I had friends questioning us. We reached the point, at least for sophisticated investors, where Bitcoin is on the menu, right? People might not be ordering it, but it is acceptably on the menu. Okay, I would say for sophisticated investors. When you put it in a 401k, when you get an ETF, as Anthony suggests, is probably forthcoming with Grayscale, those are two big steps, right? Where now it's on the menu for everybody and it's easily acceptable. So, I think it's huge. Anthony, you wrote a letter today. You want to tell people about the letter and what we're doing at SkyBridge on this issue?
Well, I mean, the Department of Labor is slow rolling Fidelity. And so we put a letter out, which is posted up on my Twitter feed. I think SkyBridge's Twitter feed as well, just offering our opinion of the situation. I think Fidelity went to some of their clients who are pro-Bitcoiners like they are, and they basically asked them to opine on why this is safe and to also opine on why Fidelity is willing to set the system up, the 401k program up pursuant to whatever the Department of Labor wants. And so I think the problem, and I want to be fair to the Department of Labor and other regulators, the problem is there's volatility in this product. And so it's not a municipal bond. It's not a U.S. Treasury. This is an early adopting technological asset that we think has some of the futuristic properties that's going to delayer the entire global economy over the next 10 or 15 years. Fidelity, ourselves, we think this asset and the blockchain are absolutely transformative, and they're generationally transformative, but they're going to come with some level of volatility. And so Fidelity is basically putting the bells and safety whistles and safety seals on it that the Department of Labor is asking for. And so we've asked the Department of Labor, in light of all that, to please accept their proposal to allow us and others to put the 401k program in place for our clients. So when you're at the front of something, you get a lot of heavy wind. You got to let a salt spray in your eyeballs. There's a technology event happening in Kiowa. That's John Darcy's stomping ground down there. I don't know what the name of that event is, John. You're our conference guru, but Andrew Sorkin was down there this morning. I'm getting rated reports from down there that all of these CEOs above the age of 55, in closing in on 70, they quote unquote love the blockchain, but they hate cryptocurrency. And so that is like a mantra and a chant from like 2016 or 2017. And now that we're in a bear market, the level of love and gloatation is unbelievable. Okay, so to me, what I love about Abigail Johnson, what I love about Fidelity, they got a stake in the ground. They see the future. They're going to help make the future possible. And of course, the big elephant in the room is if we can get this Bitcoin Cash ETF, it'll force everybody into the channel. And it'll cause everybody to have a product, which will obviously create some levels of demand.
Hey, John, I just want to add one thing. I want to tie this back to the question you asked before about, sort of increasing Bitcoin and maybe ETH dominance after the Luna fiasco. And I want to say two things. One is our flagship fund is a registered fund. So we've had discussions with the SEC about when we added Bitcoin and then when we added Ethereum. I can tell you from the SEC's perspective, there's Bitcoin and there's everything else. And they would lump Ethereum with dog shit coin, right? So they are a long way away from wanting to see, right, Ethereum or other coins in registered funds, which are right amongst the biggest funds through which investors invest. I think likewise, and I've not had any interactions with the Department of Labor, but I know from Fidelity's standpoint, Fidelity is a Bitcoin only company. Fidelity will not be offering Ethereum. So again, as you think about the cryptocurrency ecosystem growing, it's going to be led by Bitcoin. And it doesn't mean that these other projects aren't going to be absolutely huge and transformative, but it's Bitcoin first. And this is one of the reasons why I hate, crypto tribalism, like the ETH against Bitcoin or Solana against ETH, because like as Anthony points out, it is very early, and it's grow the pie time. It's like bring people in. Because the way people will ultimately discover other projects is by becoming a part of it and investing in Bitcoin first. So anyway.
So another piece, and one thing I want to remind everyone who's joined the call today, we like these to be very interactive. So thank you, James, for your questions earlier. You posted another question in the Q&A box. We have two other questions that we'll get to after this last topic, but please submit your questions in the Q&A box. We won't reveal your full name. Maybe we'll just use your first name to announce the question, but we like taking questions from the audience. So please submit your questions in the Q&A box that are on the bottom of your video screen. But we think about things through a very United States oriented lens, where we're thinking about U.S. regulation of crypto primarily, and obviously there's things that are changing on that front. But the world looks at the United States dollar, they look at the euro, they see the Federal Reserve easing in an extraordinary way. They see the United States government being fairly dysfunctional. running up massive deficits. So you've seen El Salvador, you've seen the Central African Republic make Bitcoin legal tender. El Salvador's president is hosting a meeting of central banks and financial authorities from 44 different countries in El Salvador to talk about building sort of a new currency standard. The IMF, the centralized powers that be, are fighting back against those types of things. They put in sort of a poison pill in their rescue package for Argentina that said you cannot, embrace crypto and Bitcoin in certain ways. So certainly there's that battle going on. But Anthony, let's start with you on this one, being the global traveler that you are, who's getting ready to head off to Davos. If you look at the appeal of Bitcoin globally, certainly there's jurisdictions like China that have cracked down on Bitcoin, but there was data that was revealed earlier this week that still more than 20% of mining activity emanates from China, despite the ban, sort of underground mining. But if you look around the world, what is your view of the appeal of Bitcoin to these countries that have suffered at the whims of the dollar, a dollar-based system, and why a sort of a Bitcoin standard might be attractive to them?
Well, listen, I think the Bitcoin standard would be remarkably attractive to anybody that has felt the wrath of U.S. dollar weaponization. So if you've had sanctions against you, or you've had some type of freezing of your dollar-based assets, or you've gotten unplugged like the Russians have from the SWIFT and chip system, of course, you're going to want to have some kind of standard come into play that no one government can control. Having said that, I think we're a ways off from that, because the United States still controls, more or less, the West still controls that old rail system. We have and this is something everyone needs to think about. We have a 90-plus-year-old highway or rail system to transact on, in terms of financial transactions. And it's creaky, it's cumbersome. Sometimes these wires take several days to go through. And yet you could switch over to the blockchain, just sort of a brand newish system where these things can happen more or less instantaneously, and you could take out tons of intermediaries. So I think it could happen. It'll happen over time. I do believe fiat currencies are going to coexist with cryptocurrencies and other tokenized assets. But let's just go to China for a second. If you needed to be bullish on Bitcoin long term, you'd really have to understand the last year as it relates to China. So China says no mas, May of 2021, get out of here as it relates to your mining. And yet we fast forward a year later, they also told their retail investors in China in December of 2021, you can't own Bitcoin, we're going to take it from you, particularly if it's on an exchange like UOB. So it caused a lot of selling at the end of December of 2021. And yet we're sitting here May of 2022, China, 21% of the mining. At least 14% of the transactions are happening on sorry about that, guys. At least I thought didn't have to stir up on, let me put it on now. At least 14% of the transactions are happening in China. So what does that tell you about Bitcoin? Bitcoin is like water. It seeks its level in all places. Bitcoin is this mysterious value exchange. Bitcoin can be packed on a USB. Try moving $200 million worth of gold. You can't really move it. It's unbelievably cumbersome. You can't cross-border it. You could put $200 million of Bitcoin on a USB and take it anywhere you want in the world. And I think this is something that, as the people completely understand this and we come out of a bear market, people are going to say, whoa, that was a terrible bear market, but Bitcoin really didn't crack. And maybe there'll be an opportunity. Duran Thatch is saying here, don't sleep in early June. We have a major buying opportunity, and when the 13th hour flush comes, maybe that happens. I don't know. I'm not smart enough to know where the bottom is. If you put a gun to my head and said, is this the bottom? I would say no. I feel like there'll be a worse bottom. There'll be a wipeout. There'll be a maximum pain point where everybody's thinking about selling their house or getting a HELOC. But that hasn't happened yet. But when it does happen, it will be a clearing price, and people will look back 5 years from that moment and say, Jesus, man, why did I miss that? Why wasn't I participating when I had the opportunity to buy at those distressed prices?
Brad, do you want to weigh in on the question in terms of this groundswell of support globally that we've seen of countries wanting to explore what El Salvador has done, what the Central African Republic has done, and the appeal of that?
Well, I actually want to speak to the rich guys of the world instead, which is, and this goes back what Anthony was saying about the weaponization of the dollar. Just think about what we've seen in the last couple of years, right? We saw MBS in Saudi Arabia put a bunch of his, extended family, right, in a hotel. They couldn't leave. They had to fork over a bunch of assets. We saw China essentially confiscate assets from like the whole tech industry, right? And now we have the same thing happening to Russian oligarchs. And they can't even get gold out of Swiss banks, right? The Swiss did business with the Nazis through World War II. And so who's the guy's name from Credit Suisse? He said it's a changing world order. I mean, they have frozen the assets of the Russian central bank, and he has nuclear weapons. I think, any nation, anyone who has any kind of significant wealth has to be thinking about having some of it on Bitcoin. Because as Andy points out, even gold, you got to store gold somewhere. So, I think where it's, Bitcoin becomes like this barbell asset, right? It's a monetary life raft for people in Argentina and Zimbabwe and Lebanon, right, where there's currency collapsing. You go poor if you just keep your money in the bank. And it's protection against confiscation if you're, wealthy living really anywhere in the world, but the United States and I guess Western Europe. So I think when the dust settles on all this and people reflect on what the West did here, I think it's going to end up being, very, very good for Bitcoin.
And I referenced crypto Bahamas earlier, and then Anthony referenced it. But, the Terra situation hadn't unfolded during that time, but crypto markets were still in retreat during that period. And even after the Terra demise, I've never seen an industry in the face of so much volatility have so much conviction about the future. As Anthony said earlier, too, just the human capital that's flowing into this space, people that are jumping from traditional financial institutions, from Web 2 organizations. You saw Terry Angelos from Visa go to a fintech shop that's pursuing crypto investing as well. Recently, you saw David Marcus resurface with a Lightning Network-oriented payments company after leaving Meta and driving their Web3 initiatives. It's just the pace of people looking to work in Web3 and build in Web3 has not been deterred by the volatility that we've seen. And as a lot of people have remarked as well, a lot of the best products and services built in Web3 are built during bear markets. It's a period where the cheerleading and the rah-rah stuff sort of falls to the side and people put their heads down and they work and they build. And so I think a lot of people are looking forward to another period like that where Web3 is sort of reached escape velocity, if you will. And we're going to get back to building, core products and services within Web3. But I want to go to some of the questions in the chat in the remaining time that we have. James has a question, and I think there's a broader question in here. His question is, how do you explain MicroStrategy trading at a 30% discount to its Bitcoin holdings? I think a broader question, and you can tackle that one, Brett, but the broader question is, you're seeing a business like Coinbase trade down sharply. Coinbase is not Bitcoin. It's a real business that has revenues. It goes through ebbs and flows as digital assets do in some cases, but some of the valuations that we're seeing of assets like MicroStrategy, like Coinbase, are priced for the opposite of perfection, priced for failure almost. But Brett, what do you make of public stock valuations of companies adjacent to crypto and the relative value of those?
I think Coinbase is a unique situation. Full disclosure, daughter Samantha Messing works there. Coinbase has just an unpredictable business, right? So I think it's a great business. Revenues and profitability 5 years hence are going to be way higher and sort of up and to the right. But it doesn't really lend itself to the kind of sort of smooth growth trajectory that analysts and investors like. So I'm very curious as to see when the dust settles, like what valuation that business is given, just given the fact that you can't really predict with the kind of, precision that you can with other businesses. MicroStrategy is an example, again, for why we need a Bitcoin ETF. In fact, SkyBridge and First Trust filed for an ETF in March of last year. We were rejected in January. We were preparing to refile. And in the filing, which I read yesterday, we discussed MicroStrategy stock, and we discussed the fact that it went to a premium last year of its Bitcoin holdings, and now it's trading at a substantial discount. And in that way, it's similar to Grayscale. And it's another example where the absence of a Bitcoin ETF is hurting investors, right? Because people during a good market, they're looking for a Bitcoin proxy. So they buy MicroStrategy, and they buy, the miners got bid up to really high valuations. And then we come into this terrible macro environment and people sell, and now they trade at a discount. So, when the SEC has really one first principles mission, which is investor protection, and it's just another reason why we should have an ETF. I don't have any explanation for specifically why it's at a discount, other than there's no mechanism to close it, right? So, an ETF has a mechanism in the same way GBTC does. So when we have these really bad markets and we're selling it, these are the kind of things we're going to see happen. It will probably, if we were to not get an ETF, I think MicroStrategy would trade at certain times at a premium to its Bitcoin holdings, at certain times at a discount. I would say that if and when we get an ETF, I think it will probably trade consistently at a discount to its Bitcoin holdings, because people who are right now, the only reason to own MicroStrategy is for the Bitcoin. And if there's a more efficient way to do it, I think you'll see some shareholders of MicroStrategy exit and opt for a Bitcoin ETF.
So I'm going to leave Brett's answer on that one, Anthony. We're going to go the full hour today because it's been a while since we did one of these, but I want to go to another question. We have several questions in the chat about Algorand. So Anthony, you've been public about your belief in Algorand as being sort of a sleeping giant in the layer one protocol space. Obviously doesn't have quite the adoption that some of the other challengers to Ethereum has, but could you talk briefly about why you're a believer in Algorand and what you think the potential for Algorand is as a layer one?
So here's what I would say. Again, I don't want to bore people, but when we looked at Algorand, in our opinion, had a lot of great technical properties. Sylvia Macaulay invented a cryptocurrency, a cryptograph that is decentralized. It's scalable. There's been no downtime. And so we sort of feel like it's very secure. It's solved the trilemma, the ultimate trilemma. It's also, because of the way it's set up, it's net carbon negative. And so our belief was, and this hasn't happened yet, but our belief was when large scale chief technology officers look at layer ones and they say, okay, I've got to tokenize a piece of my business. I've got to tokenize tickets maybe, or tokenize art, or create liquid, which once was not liquid. That could be anything that we could more or less tokenize. Which one of these layer one technologies would I use? Now, Ethereum, great technology. Lots of early adopters came onto Ethereum, built an amazing community. Solana did the same thing. Where I believe Algorand will get the pickup is in the Fortune 50 crowd. When some older chief technology officer looks at layer ones, they'll say, this is a layer one that we want to use for all of these great technical properties. Now, hasn't happened yet because we haven't had the adoption that we anticipated. I do think that adoption is coming. But I will tell you what did happen. FIFA, which is the largest sports organization in the world, you could combine Major League Baseball, NFL, NHL, NBA, you still don't get to FIFA. They have 5.7 billion person reach with the world sport, football around the world, soccer here in the United States. FIFA did a reverse inquiry into Algorand after consulting their technology officers and their outside consultants. They were recommended by their outside consultants and technology officer to use Algorand. They contacted Sylvia Macaulay and they set up a deal where now Algorand is going to be the backbone for all of FIFA. Now, Brett Messing has a lot of experience with the World Cup. His family has worked on it, knows a lot about it. Brett said to me when this was going down, he said, I'm skeptical. FIFA is a large organization, very bureaucratic. I'm skeptical that they're going to be able to get this deal done. but they got it done. And the reason they got it done is because FIFA wanted it.
Are you dunking on me here this afternoon?
No, I'm not. I'm not dunking on you. I'm just trying to say how hard the deal was.
Yeah.
If anything, I think you had an appropriate level of skepticism. And so the point I'm making is, as large scale, some of the biggest companies, the biggest organizations in the world move towards platforms of tokenization, I think Algorand is going to capture and garner market share. Two last pieces. They bought Napster. They're going to reignite Napster and hopefully make it a Spotify competitor, however large or small. LimeWire just did their deal. They're an NFT music industry, NFT production company using Algorand. There's another NFT business, which is a bot war programming gaming sort of thing that's about to be announced here shortly. There's lots of projects coming. TVL is growing. Algorand has gotten torched alongside of everything else in this very, very rough bear market. But I do believe its best days are to come.
Last question. I will direct this towards Brett, but I have a feeling he might direct it back towards me. But Titan in the chat is asking what our view is of NFTs, whether they have a robust future, and how we're looking at NFTs potentially at SkyBridge.
John, you are our NFT expert, so I think you will give a much more thoughtful and informed answer than I will. So yes, you should take it.
Well, what I will say, and I'll keep it short because we're almost out of time, but I think NFTs are extremely interesting. I think as you go down the risk curve of crypto assets, Bitcoin now being the boring grandfather of crypto assets, down to Ethereum, through to altcoins, and then to NFTs, they experience volatility just in the way that some of these altcoins do. But what you actually saw was certain blue chip NFT projects during this downturn in crypto actually holding up better than a lot of altcoins, especially products that have a roadmap, if you will, which is an overused term in the NFT space. But you've seen things like Bored Ape Yacht Club deliver a lot of value to their users. You've seen something like the Proof Collective, led by Kevin Rose, now Alexis Ohanian, deliver a lot of value to their community. You've seen other assets within the NFT space that do not have as defined of a roadmap, that are more focused on the art, that the PFP projects in particular, like CryptoPunks, that have not performed as well over the last year. And so what I think you'll see is you'll start to see the same way we've seen assets diverge within crypto. There's going to be standards that people apply to NFT projects, and the ones that have more utility, a more defined roadmap, are ones that are going to perform better. And certainly the Bored Ape Yacht Club and Yuga Labs has separated themselves in terms of the community they're building. They're building games. They aspire to be the new Disney from an entertainment perspective. But I think you're seeing more and more NFT funds pop up that are buying one-of-one art or blue chip NFT projects and getting in the early stages of new projects. And I think you'll start to see more of those proliferate. And I think you'll start to see other asset management firms include NFT as part of their asset mix within a digital asset portfolio. SkyBridge isn't there yet. My fascination with NFTs is more personal than it is from a business perspective. But Brett, Anthony, and I talk often about what's going on in the NFT space and continue to evaluate whether it has a place within our sort of asset management business.
Can we answer these questions really quick? When do you guys see the 10-year Treasury topping off? We don't know an answer. We don't know the answer to that, but we sort of feel like inflation is going to trend back down to 4 or 5 handle. We think there'll be negative rates, so we don't think the 10-year gets to 4. That's just our opinion. You can go to Truflation, truflation.com. It is a blockchain project that's aggregating data that shows you the truflation in the United States, not the governmental quote unquote statistics. So take a look at that. Equity proxies for Bitcoin as good as Bitcoin. Brett, what do you want to say there? Equity proxy for Bitcoin as good as Bitcoin.
There's nothing as good as Bitcoin.
You see, that's the problem. They trade somewhat correlated and they break. MicroStrategy, Grayscale.
Yeah, MicroStrategy would be the best one, but they're all pretty.
They have a tendency to trade at a discount. It's not perfect, but I would go with MicroStrategy. What is the next support level you would look to buy Bitcoin next for the long term?
Brett, you want to tackle that one?
I'm buying Bitcoin right now. I mean,
Yeah, I think any purchase under 30,000 is gonna feel like
you may catch those levels. We're in a horrific bear market. Who's getting who? You may catch a 14 or a 24. Brett and I don't know that. We know that we're unlevered. We know that we have an inventory of Bitcoin that we like, and we predicted that inventory of Bitcoin will be worth a lot more money in fiat currency, known as the US dollar, over the next 5 years. So we're going to hold on to our Bitcoin. 1 Bitcoin equals 1 Bitcoin. We just don't know where the bottom is, but those things are possible, but I don't think likely. I like the way Bitcoin is trading here, given all the market activity. Anything else?
I think we'll leave it there. I think we have to make it clear that we're not necessarily market timers. Certainly we try to be opportunistic. We don't give investment advice on what you should be doing with your own money, but we are long-term thinkers. And Anthony's harped on that on Twitter, is that we think we're in the early stages of a paradigm shift in terms of financial infrastructure and the future of money. David Solomon said the exact same thing this morning from beautiful Kiowa Island, South Carolina, where there is an event going on that CNBC is covering. And you're starting to see people like Goldman jump in. I don't think they'd mind me saying they had senior people down at Crypto Bahamas. They've been to the Bahamas previously. This was publicly reported, so I'm not sharing anything secret, to court FTX regarding potential future IPOs and business that they're doing, given FTX is involved in M&A activity. And so you're starting to see people like Goldman, who are influencers in the banking space, jump in here and say that we're embracing the future of digital financial infrastructure. And when those people start doing it, you start seeing other people follow. So yeah, think long term. We're trying to be shepherds for people that still learning about digital assets, that we think it should be somewhere in your portfolio. But we're going to leave it there. We went the full hour today on the return of the SkyBridge Bitcoin review. Going to look to do these more frequently again, especially given current market conditions. But if you have any questions that you didn't feel comfortable asking during the show, or that you have as a follow-up to anything that was said here, you can email us at ir@skybridge.com. Again, that's ir@skybridge.com. We're also going to be doing a lot more written communication. We're going to have a regular newsletter that has more opinion laced into it, as opposed to purely news-oriented updates and analysis and research from John Svolos, our director of cryptocurrency research. He's had a long career across the street, is very sharp. So look forward to sharing more of that with you and communicating more regularly. But thank you, Anthony and Brett. It was great having you guys back on the SkyBridge Bitcoin review. And we'll see all you guys soon, either on the pages of our newsletter or on our next Bitcoin review.